All right, good afternoon, everyone. Thank you for attending Everlasting Word Church's Money Smart event. Today, we are going to be talking about steps to home ownership. And we also have the printout on our Zoom, so hopefully you can download that and take a look at that and follow us, those of you who are calling in. So, yes, calling in. So the topics that we're going to go over is homeownership right for you? Because, you know, everybody says, I want to be a homeowner, but do we really know what that means and what all goes with being homeownership? When you're a renter, something breaks, you just call the landlord. When you're a homeowner, something breaks, that's all on you. Or someone falls on your property and gets injured, that's all on you. So there's a lot of things that go into account of being a homeowner. How to buy a home, we're going to talk about your homeownership team and what that means. What the actual mortgage payment is and other costs associated with that, because it's not just your mortgage payment. All of the utilities are on you. When you're a renter, sometimes some of the utilities are included and things like that. When you're a homeowner, as we say, you know, you pay the cost to be the boss. So, okay? Don't worry about the tech guy that's over here.
Pay no attention.
We're going to talk about how much you can afford and what qualifying ratios are. We're going to go over those terms because these are things that your loan officer or mortgage broker are going to talk to you about. And then we'll also talk about the advantages of homeownership. You know, some of the things that we think about is it's a stable house cost, basically, assuming that taxes and insurance don't go up. And whatever your mortgage payment is, if you have a fixed rate, that should be consistently what your mortgage payment is. Tax benefits, you can actually write off the interest that you pay on your taxes. So for folks who own their home, when income tax time comes, they get a mortgage statement from their lender. That can increase your tax return anywhere from about $4,000 to $6,000, depending on what your mortgage payment is. So there's tax benefits to being a homeowner. Equity, the somewhat control over your environment, depending on who you let live with you. You know, as the homeowner, you can control who's in your home somewhat. And then overall stability. So for instance, if I was just in college and I'm looking to maybe look into another profession in another 5 years or so, although homeownership may be overall cheaper for me, it might not be the right move for me, because another 5 years I might be wanting to relocate or what have you. I might not want to have a renter, things like that. But if you think you're in a point in your life where I'm in a community, this is where I want to be, this is where I want to establish myself at, then homeownership might be the answer for you. And at any time, please feel free to stop me if you have questions or any of the terms that I go over. Is this supposed to be flat?
It doesn't matter.
Oh, okay. Okay. So here we're going to talk about some of the disadvantages of homeownership. That monthly cost is serious. A mortgage payment is serious. With rent, there's a little process that you go through before they get to the collection process and different things like that. With homeownership, there's legal implications that can go against you, which we'll talk about a little later. Thank you, so. There's no guarantees. Homeownership generally is anywhere from a 10 to 15, 20, 30-year mortgage. So that means it's 10, 15, or 30 years you will be paying on this asset. So, you know, there's no guarantee. A lot can happen in 2 years. A lot can happen in 5 years. So there's no guarantees that you're going to pay off this mortgage. We're on page 2 of the printout. Maintenance and repairs. I believe right now, roofs, if something happens to the roofs, you're looking at anywhere starting off the top, anywhere from $5,000 and up. $5,000 being on the cheaper end. More than likely $5,000 to $10,000. So you need to have that money around, or you need to have access to finances to be able to get those things taken care of. And if you're in a city like the city of Aurora, the great city of Aurora, they have a lot of requirements on homeownership. There's certain ways that the lawn needs to look. You can't keep those Christmas lights. The sidewalk can't be broke up. Even though you may not be responsible for the sidewalk, it might not be your property, it might be public property, but you have to get it fixed because it's on your property. If there's a tree that needs to be cut down. So these are all things that you have to think about when you go into home ownership. Your leaves, back in the day, we used to burn those leaves. You can't burn those leaves anymore. So you've got to put them you got to purchase a recyclable bag and then put it on the corner to have it be picked up. So, it's a lot of things that go with home ownership. Yeah. That's why you throw it on your neighbor's side when they're not looking. So, like, boy, your yard got a lot of leaves. And there's right, and there's fewer features that are included. So, meaning that when I go to rent, I have the option of saying, well, I want a 2-bedroom, I want a fireplace, I want this, I want that, as long as I'm willing to pay for it in that rent. When you go to buy a home, that fireplace may not be available. That 4-bedroom might not be in your price range. So there's a lot of things that you have to take into consideration. What I'm willing to live without. You might not be able to be in the neighborhood that you want to be in. So those are just some things that you want to keep in mind. So the next thing we're going to talk about are the actual steps to home buying. First step is to attend a homebuyer education class. Congratulations! We all got the first step down. Right, we all got the first step down. Second step is you want to determine how much you can afford. So the EWC Home Center, those are some of the things that we can help you with. Determine your overall affordability, help you determine what type of down payment you can put down, things like that. Those are all things that we can help you with. Joni, if you're on here, you want to mute your children? So. Or Kendra, could be Kendra. Right. Once and the benefit of working with the agency like EWC or any nonprofit, is that we're going to do a pre-qual on you that won't affect your credit. So before you start going to bank to start having your credit pulled, it's a good idea to utilize housing counseling agencies such as ours, where we can take a look at your scores and different things like that and create a soft pull. We talked about that. Yes. Did you have a question?
Pre-qual is another term in your industry.
Sorry. Yes, please stop me at any time. So pre-qual or pre-qualification means that it's similar to, I gave this example yesterday, when Ford puts out a flyer on everybody's car that says, or everybody's door that says, you're pre-qualified for this Mustang. But when they do the actual pre-approval, you qualify for the Escort, okay? So pre-qual means everybody in the zip code of 60506 is pre-qual. That could be one of the criteria. So if you live at 60506, that could be one of the main things to get you in. So what I mean by meeting with a housing counselor, and we can do pre-qualifications to determine what your financial picture looks like before you start applying for a loan. Once you apply for a loan, you have 14 to 30 days to apply for a loan without it affecting your credit. So which means that I can go to 10 different banks. It's only going to count as one hit, okay, within that 14 to 30 days. There could be a little bit of difference. That's why I say the 14 through the 30 days or what have you. But if I did a loan application today and then I wait, 2 months down the line, those are two separate hits. Okay. If I went to a mortgage broker and they send my credit to 5 different companies, those 5 different companies will show up on my credit report, but it will only be one hit. Okay. So that's why when you really are serious about shopping for a mortgage, you want to make sure that you're taking that time to really to do that and to protect your credit. Okay. Yeah. Stop me at any time.
How long does it take for that hit to come off of your credit report?
2 years. So anytime that you're applying for credit, it takes 2 years. Those are what we call inquiries. So they take 2 years. So definitely, especially when it comes around Christmas time and they're like, open up this account and, we'll get you 15% off those $2 that you're getting off of your purchase. It's costing you 2 years and it's costing you a couple of points too. Now, will you be denied because you applied for credit, 2 or 3 times? No, but if you applied for credit, 5 or 6 times within the last 12 months or 2 years, yeah, that can mean that you're kind of desperate and looking for credit. So, that can make someone pretty leery. And so what that looks like is that you went around and asked 12 different people for money. And then you come and ask me for money. Why did you ask 12 different people before? Why did it take 12 different people before you got to me? So that's how a credit report kind of looks to someone who's lending, if you're seeking to get credit or things from, okay? Good question. So we're on the third bullet. So you would meet with the lender for pre-approval. So this is the official pre-approval. This is what you want to give the realtor. This is what's going to help you to shop, because technically you can't apply for a home loan until you have a property, okay? Because then you have to literally say that I want to buy this item. So a pre-approval is like shopping for these 3 different things. I don't know which one I'm going to be able to get. And then once I pick which one I'm going to get, then I'm going to fill out the loan application for this one. Okay? So if that makes sense.
Yeah.
Okay. All right. I have to remember that not everybody speaks that language, so I want to make sure that I'm breaking it down to where people understand. After that, after you get the pre-approval, you want to determine what your needs and wants are in a home, and then you want to shop for a home. Some of the things I always tell first-time home buyers too is when you're looking for a home, and Flo can probably attest to this. When you're looking for a home, look in the neighborhood that you want to be in. Go at different times of the day. Are you in a neighborhood that's on and popping? Or maybe that's what you want, you know, maybe that's what you want to be part of. Right. And popping can be whatever way, it can be music or bullets, whatever way you know, depending on where you're at. But, you know, I know when I first moved out to, I can't even think of that place, out by the mall. And it was really nice. They were townhomes, really nice. Yeah, yes. I don't want to say their name now that I think about it. Yes. And it was a really nice area and everything, but I moved out there in the summer, and then school came, and I don't have kids. So them kids were everywhere. You know, traffic was backed up everywhere. I didn't think about that when I moved there. I mean, it had a daycare, it had a junior high, it had a high school. So, you know, and then I run late because I could do so. I have the time to run late and all that. I'm not dropping anybody off. And I would be lined up behind those parents and those school buses snapping. Like, I can't wait till I move. So that's what I'm saying. The area that you want to be in, or go set your alarm clock, go around at 3 o'clock. What's going on at 3 o'clock, you know? On Sundays, what do they do on Sunday? Do they play loud music on Sunday? Girl, come to my neighborhood. Yes, it's on and popping every day of the week. Yep. Or if it's a main fighting event, are you in the neighborhood that the house that hosts all of the fights? Yeah, right. You know, so those are things to take into consideration. Or your neighbor, she's a little old lady and she's so sweet. She got 20 grandkids, you know, and they and they all stopping over. I mean, I'm just saying. So, you know, you just want to keep these things in mind, okay? Or does your neighbor have, 20 dogs that they let poop everywhere?
Yeah.
So those are some things to keep in mind, okay?
Whenever we bought our house, we went at different times, like you said, and we actually met the neighbors.
Good, yeah, very nice.
Which encouraged us because they're about our age.
Right,
and we got to know them before we even bought the house.
Right.
You know, because oh, are you going to be our new neighbors? I said, possibly.
Right.
And then they started chatting with us.
Right.
Which is really nice when you go at different times.
And you know, one thing too you got to check too is when you move in a neighborhood, some people think the parking space in front of their house belongs to them.
I'm that person.
Yeah.
But it is a city street.
Nope.
Yeah, you know.
That parking space in front of the house belongs to me. Nobody should park there.
It is a city street, but people, they really get offended.
I'll be looking out the window like,
who's parking there?
Right.
I am that person. How dare they park there? So yes, I'm that person. So you can end up with a neighbor like me. We'll be like, excuse me, I need you to move your car. That is my parking spot. Oh, right, absolutely. So, right. Right, absolutely. Okay. Right, absolutely. Okay, so after you shop for a home, you find a home that you like, you're gonna make an offer. The next step is obtain a professional home inspection. An inspection is different from the appraisal. Okay, appraisal, you have no choice. That is to determine the actual value of the loan, making sure that the house meets the value of the loan that you're getting. A home inspection is your option, and you do hire a home inspector to come in. It's a process that takes anywhere, depending on the size of the property, but anywhere from about a good 2 hours. And if the property is a little bit bigger, it could be 4 or 5 hours, depending on the size of the property and the thoroughness of the inspector. That inspector should be getting in those corners. They should be running faucets. They should be hitting switches. They should be looking at, I mean, they should be doing everything, okay? You are free to follow your inspector around. I encourage it. So that way when they go into a crawl space, they can say, hey, do you see this right here? You see this water? Or you see, you know, or they can show you, look at this. You see this mold or what have you? Typically the cost will be anywhere from $250 to maybe $500 or maybe a little bit more depending on the square footage that they have to do. But you can use it as a negotiating tool as well too. Now, the one thing I always hear inspectors say, they always say, people ask them, should I buy this house? That's not what the home inspection is for. It's not to tell you if you should buy the house, but it's to tell you the overall condition, the guts of the house. So if a home inspector gives you a, they did one and they tell me the electrical looks like it's good for another 2 to 5 years. That means, am I willing to pay my comfort level? Is my comfort, am I comfortable with 2 to 5 years? I may have to replace some electrical. Then again, it may not even happen. But just based on their expert opinion, this is what they're saying. So I can go maybe to the negotiating table with the seller and say, hey, I believe in another 2 to 5 years, I'm going to have to put some money into this. Can you lower the price? Although I believe right now, Flo, it's a seller's market, correct? So they'll tell you take your little, so that's how you take your little inspection. And yeah, our market is pretty hot right now. But it's still a good peace of mind for you. And also it'll tell you the warranties and things like that are on different systems. And I always tell people, I mean, if you can't afford to invest in precaution type things, then I don't think homeownership is ready for you. So yeah.
Another thing, my realtor had advised me to buy the warranty.
Mm-hmm.
And so if the furnace goes out or something else, what is it, in the first year or so?
Typically.
It depends. It
Yeah,
could be a
but the
year,
one we
2
got,
years, yeah.
but we got a warranty just in case something
Yeah.
major
All
went
the
out.
major stuff,
Yeah.
furnace, AC,
It covered all that the first year, so in case or whatever we took,
Mm-hmm.
which gives you more peace of mind when you're buying it, so
Right.
you ain't got to turn around and buy a major thing.
Absolutely.
And then our house was built like in 1923, so they only had like one light per room.
Right.
So when you plugged in the air conditioner, it would blow a fuse.
Right.
You know, all that, so you got to
Right.
look at how old your house is and how old the wiring is. Because you figure back then they didn't have computers, they didn't have nothing.
No, they were still using
They didn't have a
candles
microwave,
and all,
nothing.
yeah.
So
You know? Right.
Yeah.
Right.
They just had one light bulb hanging from a string. So.
And so it's
Yeah.
really, like you said, it's to give you that peace of mind, okay? And to protect you. It doesn't mean that what that inspector says is going to happen, but at least you know, okay, I should have this much in savings if I'm getting ready to purchase this home. I should keep in mind, I'm going to have to replace this or replace that. And believe it or not, new construction should be inspected as well, okay? Because who would think that maybe the contractor didn't really know what they were doing? Or they cut corners. Right. There you go. Right. There you go. Yep. Absolutely.
They left like some of this wallpaper on the wall hanging and covered it with the curtain.
Yep. They gave him the check too fast. They gave it too fast.
I'm like, y'all should have known. He used to drink beer on the job.
Right. Right.
I was like,
Right.
why did y'all keep him?
Well, you know, when it's new construction, especially if you have access to, well, you should have access to the neighborhood or what have you, drive by there. Drive by there.
That's what I did.
Yeah.
We were building.
Don't get in their way, but you know, drive by there. Yeah. Most of the time, the contractor, most of the time, is like, oh, hi, how are you? Nice to meet you. Yeah, this is what we're doing today. They're like, what you doing around here? Then that might be a little questionable, you know? So.
I had a friend that they were building this home,
Mm-hmm.
and she used to go every day and go to the site and see everything. You know,
Take
every day.
pictures. Mm-hmm.
And she might have getting a job from
Oh, because she can.
Yeah, because she was helping them sell houses.
Right,
You know,
right.
because she was there so often and doing it. They asked her if she wanted a job, so she got a job selling houses for them.
Yep, there you go. You have it's your property. You have the right to go and look and see what's going
One
on.
thing I learned too, if you get a friend to do repairs for you, don't give them all the money up front.
Right.
Enough to buy the material, and the rest of the money when they're finished.
Right.
Yeah, this is something I learned.
Yeah.
The first time home
Yeah.
buyer.
And I put the disclaimer: if that family member works on cars doesn't mean that they can do home repairs. Okay, so you need a certified, contractor who can do real things. Right.
Not
Okay.
only that, even if they're family and they are a contractor, don't give them the money.
Don't give them the money.
You
Right.
might give them money, you won't
Right.
see them for another 6 months.
Business is
And
business.
my
Absolutely.
shower's falling apart. and
Right.
everything.
There you go.
Business is business. Yes. Okay. So you then apply for the mortgage. secure homeowners insurance. You're going to have to pay homeowners insurance, and you have the right to shop around. Shopping around for homeowners insurance will affect your mortgage payment. Okay, especially today, most people, their taxes and insurance are included in their mortgage payment. So, okay, and then you close on the loan. Yay! Okay, so in the one slide we talked about the home buying team. So what I mean by your home, and you really should think of this as a team. This is one of the major purchases you're going to make in your life. So you want to make sure you have the right experts around you who can guide you and make sure that you're making the best purchase for yourself. So one is the housing counselor, myself, or Jennifer Donaldson, our housing counselors. Real estate agent, we have one among us, Swope, yeah, with Ketley. Yep, yes. And your lender or your bank or your mortgage broker, whomever you choose to work with. An attorney. Attorney is not required, but I once again, another $200 to $400. Generally, it's a one-time fee, and generally they are your attorney through that whole transaction. So, for instance, I find a home, I get outbidded. I find another home. It's not like I have to pay another $300. Generally, my attorney is going to stick with me through the whole transaction. Okay. I would advise you not to get one that does by the hour, because anything can happen with real estate. Yeah, most of them there's a flat fee. Yeah. Okay. So I mean, and for the $300 to $500, they're going to do title search. They're going to do the background, make sure that the title is clear. There's been many cases where people have inherit property, quote unquote, inherit property, and then find out that they legally have no title, no claims to it. You the step kid of the, the new mama, baby mama, and you have no, just because, Uncle Tom left that on his will, that doesn't mean that you legally may have rights to that. So that's what the attorney's going to do. The attorney's going to make sure that they legally have the right to sell the property. We've had people who cut leases and everything, thought they were going to move into something, and something comes up on that title at last minute at the closing, it all shuts down and people got nowhere to stay.
We had something similar selling Union property, where they had refinanced, but the mortgage company never paid off their portion. So they paid it, but on paper it looked like it hadn't been paid.
Right.
So if their attorney was not there, we would not have closed it.
Yep.
He got on the phone. He was making phone. I mean, he got it done. So without the attorney, we would not have closed.
Absolutely.
You never. I tell people all the time, because even if you're not a first-time home buyer, some people think, well, because I've owned a home before, I don't need that.
Yep.
But you never know what could happen at the closing.
Absolutely.
We did.
Absolutely. I had a client who called me maybe about 2 months ago. They closed on their home last September, and they said, we've been in this house since September. The ceiling is leaking. It looked like it's leaking all the way from the roof all the way down into the basement. There's some type of leak here, and we did a handshake and agreement, and the guy told us he did all the repairs himself. And this is a client who went to one of the home buyer workshops where you clearly heard me talk about the home inspection and the attorney. And I asked them, I said, well, did you contact the inspector? Well, we didn't need an inspector because we had bought a house before. Did you contact the attorney? Well, no, because it was a handshake deal, and his neighbor said he's a up and up guy, and so they're having water damage that's possibly causing mold and causing possibly health concerns and things. So at this point, there's really nothing you can do but pay to get it fixed. And roof, if there's a problem with the roof or anything, remember I said that starts from $5,000 up to $10,000. So, and they just moved in September. So I'm sure there's not a lot of savings, because they probably didn't pay attention to anything else I told them to do too. Told them make sure you have savings. So they probably didn't have all their savings together. And so, and that's all I could tell that client.
It's not about intention. They might have the best of intentions.
Absolutely.
It doesn't mean anything about the quality of life.
If I want out this house, whatever you want, whatever I got to tell you, yes, there's daisies that pop up every summer. Yes, I want to be out this house. What do I got to tell you?
And I also learned that I liked about the attorney, because we sold one, we bought one. And then when the inspector comes in, I don't have to deal with that other part. My attorney does.
Your attorney handles all that.
The paper and says, this is what the inspection found, and what do you want to fix?
Absolutely.
Or do you want to fix anything? I don't have to stress about all of that. And then when we bought this house, this is what we found.
Yep.
And we took them to them, and do you want to
Yeah.
fix it or don't you?
Mhm.
You know, I mean,
Yeah.
it's all in the attorney.
Your attorney can even go to the closing on behalf of you.
Yes.
You
Yeah,
don't
'cause
have to
when I
miss
sold
one.
my house on Union, they're gonna tell me the furnace didn't work. So I asked the contractor or the person buying the house, did you like the pipe?
Right.
Right.
This guy's supposed to be an inspector. I think one of their cousins or something.
Right. The mechanic.
Because all you had to do was light the pilot and the furnace would have kicked up.
Yeah.
Yeah, right,
Yeah.
Because it was a summertime sale. I'm
Yeah.
like,
No, they were ready to get 2,000 back. Drop that price, 2,000.
And I told him I'm not going any further. That's as low as it's going.
And that's how closings get canceled.
Right.
Yeah.
Right.
I'm taking this with me. I'm taking that.
Yeah.
So when they get there, half of the stuff. Like,
Half of it's gone.
It had it written down. I said I was.
Yeah.
taking this with me, you know?
Absolutely. Yeah. And that's what I was telling. I don't know if I might have said that Tuesday, but yeah, I've had buyers. I was telling before you, the night before when you do the walkthrough, take pictures. Take your cell phone. It has a stamp of time or what have you. I've had buyers who went through the house. They took a picture of everything, and then like a week later, they noticed on Craigslist that those are their appliances that were supposed to be included in the contract. But one lady happened to catch the seller trying to sell the refrigerator, and she could tell because of the stickers, and she looked at it because she's like, that looks familiar. And she looked at whatever Smith is all on the refrigerator. She's like, oh, the Smiths are trying to sell my refrigerator. So people do that. People do that.
That's how you see a property. The MLS is a contract.
Mhm.
So how you see that property,
That's how you're
if
supposed to get it.
appliances are listed, then
Yeah.
that should be
Those
with
are
it.
the-
So they would have
Absolutely.
to pay to compensate them for anything that they
Absolutely.
sold
Yep.
in the house.
Yep.
So,
Absolutely. Yep.
But our house, they told us whatever is in the house. You know, like the curtains or.
Fixtures?
Yeah, stuff like that.
Oh, and personal
That it has to
belongings.
Go with the house.
Yeah,
It
doesn't have to.
It doesn't. I'm saying that.
That's what they told you.
Our house, that's what they told us.
Yeah. They didn't want to pack none of that stuff.
Right, I guess they didn't want to take it down or anything.
It's up to the seller.
Yeah, they like, let me bless you. But there's a different fixtures than personal belongings. Yeah. Yeah. Yeah.
They'll give you everything in there.
But on that real estate contract, it lists everything from garage door openers. It'll say 2 garage door openers. It lists there if it's a antique cabinets or whatever. It fixtures. Yeah.
I've known pool tables.
Mm-hmm.
They leave the pool table in the basement. It takes too much to get it out.
Yep.
They leave
Now
it.
this is part of the house. Right. It belongs to you now. Right. It belongs to you now. That is now your thing. Okay, so we were saying the attorney, the title insurance agent, the home inspector, the appraiser. Remember I was saying the appraiser, you don't have a choice of. The bank will choose the appraiser for you and pass that cost nicely on to you. Now there are standard costs that are in our area. So, which means, I think it's about $750 or so. I think is about what the appraiser cost goes. So anything that's over that, the title, your lender can either pay for that, or you can't. There's some laws that change, so you can't get your own appraiser. So they shouldn't be doing the cost above what the industry standard is. Otherwise, they're going to pay for that. Okay. All right. And then your home insurance agent. Okay, so now we're going to talk about mortgage payment. What's all in a mortgage payment? This is what we call PITIA, or pity. Your mortgage payment is pity. You got to pay it. Okay? Pity the fool. Pity the fool. So what that means is your principal, your interest, your taxes, your insurance, and now we include your homeowners association or assessments. So if you're in an area that's developing and it looks like they're getting ready to put a park across the street, you're going to pay for that park. So when they pass around those things and they say, we want to petition to get a pet park here. If you don't have pets, you can say, no, I don't want no pet park here. If not, you're going to pay for it. Or when they say, I want to put a school here, you're going to pay for it. So those are and these are things that can affect your payment. Okay. Absolutely. So the principal and interest will be the same if you have a fixed mortgage. If you have an adjustable rate mortgage, it'll be to the terms of the adjustable rate. Your taxes generally are 3 years in advance. So for all the folks who are paying today, they will probably see an increase in the next 2 years because property values and things. I know. I hate to do it. I know. You can try to fight it. Ooh, Kendall County. Ooh.
I know. They're killing
I think they're higher than Cook. So,
Yes,
Yeah.
so
Cooking's gotta be.
Kendall
bad.
County is pretty up there.
Oh, Kendall.
Kendall is high.
But have you seen Kendall County? It's nice.
They got everything.
Kendall County is really nice. They got all the restaurants. They got that nice Target. I mean, they're nice.
Even the YMCA.
I know. I know. Everything's in nice walking distance. You paying for that.
Four lanes.
Woo, so Kendall, they paying for that. How much y'all paying for those 4 lanes?
It's about 10 years of payments.
Right, right. That's why there's nothing wrong with old Tomcat Lane. nothing wrong with that. It's nice and established. Yeah.
In an up and coming area, or
Yeah.
even an established area,
Mm-hmm.
but you're in a rural area.
Yes.
Stores have to be built.
Yes.
And gas stations have to
Mhm.
come, and the city usually makes deals with these companies
Yes.
for them to come in. So
Absolutely.
they're just gonna pass that on to the home buyer.
I
Absolutely.
know over in Fifth Street, for years, I kept paying for a library in Oswego. I live in Montgomery.
Right. Absolutely.
And I didn't ever see a library.
Because of those lines. Yep.
About 5 years later, here comes the
Oh.
building, a library
Yep.
over there on what street?
34.
Yeah.
Washington up there.
Yeah, up in there was a brand new library. I said, so that's what I've been
Been
paying
paying
for.
for.
Yep. They had to get the funding. They had to secure the funding.
Right,
Thank
right.
you for
But
securing that
I live
funding.
in Montgomery. This is Oswego. It's not even my city,
Absolutely.
and I'm paying for it,
Absolutely.
but it's at my back door.
Absolutely. So your taxes, you can always appeal them. I always like to say the tax system in Illinois, they're like little mafias. I'm sorry, lack of a better term, but yeah, they're not going to approve that. So, but you may go through the appeal process. And then there are exemptions that are in place. There's exemptions that are in place, such as a senior exemption or persons with disability. So if you receive Social Security or if you're on disability, you can ask for your taxes to be reevaluated, and generally they'll give some type of discount. And then there's also a senior freeze that people can participate in as well too. Okay. And then if you're approved for either one of those, you can send a copy to your mortgage company. The county will also send one to your mortgage company, but I always say be very proactive. And it is based on the age of any senior in the property. So if you're married at senior age, I think they just raised it. It was 62, but I think it's 65 now. So if you have someone that's 65, you can check with your county to make sure, because the application will tell you on there what the age is. Okay.
Because we went to Yorkville.
Okay.
And I went to apply for it. And they prorated us.
Okay.
Because we weren't there. We were
Right.
there from July
Right.
until December or whatever. But in March, I had to do it for a whole year.
Okay.
when they
Right.
sent it to me.
Yeah.
But I
Okay.
haven't got the discount yet, but it's coming. I know
Yeah.
it's coming.
So this is where you want to have a senior living in your home, so you get that discount.
Oh, okay. Yeah, go ahead and check, because it might be different in your county. Maybe.
No, that should be the age. Yeah, that should be state. Disabled is as well too. Not as much, because you also get the senior freeze too with it. But yeah.
But the senior freeze and the discount, those are two different ones.
Those are
right?
two different ones, right?
Yeah,
Mhm.
but the senior freeze, you actually have to be there.
You have to apply every year for the senior freeze, and then the senior exemption is, once it's in place, it's always in place. Mhm. Until they sell the house, so they get notice of that death certificate. So, okay.
I think you have to be there like a year or so.
Mhm.
A certain amount of years.
Okay. So, and then homeowners associations, you like your yard being cut, you like everybody's house of a certain colors and things like that, then you might want to participate in the homeowners association. So in our state, I always tell people too, homeowners associations, they have a lot of power in the state of Illinois. You can be current on your mortgage and behind on your homeowners association, and they can evict you out that property. Okay. They can get a lawyer, and they can move you faster, and they'll put a lien. Yep.
So skip your mortgage and pay your fees. No.
Try to right. No, that's not what I'm saying. But I'm saying if you're running, in some cases, if you're a homeowners association is $200 a month and you're struggling with that mortgage, pay that homeowners association, work something out with the mortgage.
And we put put a lien on this house was during season.
Yes.
He went and got the money.
Yeah.
Paid us, and he's still behind in his mortgage. He paid his fee.
I always tell people,
Yeah.
I mean, so when we talk about foreclosure prevention, you got to be up on those homeowners association. Yeah.
And make sure they paid up.
Yeah.
To get you a copy of the rules and regulations.
Yeah.
Yeah.
Because some of them can be very, very strict. I know we
Read them. Make sure
decided
that's
to
what you
repaint
agree
the
to.
trim,
Yeah.
And it took a neighbor to come and tell me, did you get approval for this trim painting?
Yeah.
Like, stay in your lane.
Right.
And I had to write this really nice letter.
Yeah.
You know, listen up to them.
Yeah.
And, but I mean,
Some of them
do
will
have
talk about the
rules.
sheds that you have, or you can't have sheds in there. The fence. Yeah, they may not want certain fences in there, so it can be really, yeah.
When we have the guys that shovel
Mhm.
and cut our grass and stuff, so this year Lorenzo's saying, well, I'm gonna fertilize. I go, wait. You
Right,
got people that do that.
right.
He said, are you sure?
Right.
Let me call somebody.
Mhm.
Sure enough, they fertilize twice a year.
Mhm.
And if he had fertilized, we would have burnt that yard up.
Right.
And see, then that would have been a cost on us to reseed
Absolutely.
all of this and everything.
Absolutely. Yeah.
Because he says, I want my grass really flush.
Mhm.
Okay, just hold on.
Right. Snow shoveling and all that, right?
Yeah, they do the shoveling, but now if we put a fence around it, they won't do it.
Right.
We have, inside the fence is ours.
Right.
So we don't leave it just like it is.
Right. So it's very important to look at those homeowner associations and see what they are. And then also when you're renting like condos, when you're purchasing condos or townhomes, sometimes with the association, they may include utilities. So you want to look and see in areas that maybe, your water and gas might be included in your association. So, there can be some benefits to it. You want to shop around. Yeah.
Well, you know what I just found out yesterday or 2 days ago with the client is
Mhm.
that normally the association is responsible for everything on the outside.
Mhm.
This one, which was in Villa Park, they were not. The only thing that they covered were the common areas, and I have
Oh,
never.
yeah.
Wow.
So she's gonna need a new roof in like 3 years or 4 years.
And she's got to pay
And
for it.
she's gonna have to come out of pocket.
Wow.
Which is really unusual.
Yeah, that is
Your
very.
covers roofs and all that?
Say that again?
Your homeowners covers your roof in your house?
No, when you have a condo or
Oh,
town.
condo.
No, the
Okay,
homeowners
yeah, yeah.
association. Yeah, the homeowners association.
Right. Okay,
You
yeah.
have one neighbor with a new roof, and then another one with a
Right.
20-year
Mhm.
roof.
Wow.
So
It looks
yeah,
straight,
that makes
yeah.
no sense to me. But
Yeah.
Yeah.
That's why you want to look at that homeowners and so of the area that you're looking at. Try to get a copy of their bylaws, their rules, and their regulations.
before you go to
Yep,
close.
before you go to closing.
Yeah, houses like in where we're at, whenever it's a house, their rules are different
Mhm.
than if you're in a townhome.
Okay, right. So they
But,
may have
you
different
know,
things.
your
Yeah.
Association,
Mhm.
it's completely different.
Mhm.
Because when we lived over in Oswego there, we lived upstairs,
Mhm.
it covered our roof, our windows, our
Right.
siding, everything. They came and did the asphalt and
Mhm.
everything, resealing it and everything. But if you live in a house, that's all.
That's
you.
all on you. Yep.
That's all
You
I
got to
do.
make that happen. Okay. So the cost of buying a home. So a lot of times we forget about the upfront cost. People always tell you, you're living in your mom's basement, and she's like, "Why don't you just buy a home? It's cheaper." Or you're living in that room. But one of the things you want to remind mom, I need down payments. I need closing costs. I need escrow. I need reserves, and I need moving costs. I got to move out of here.
You got a blackmail mom to get you.
Our mom helped me. Give me that $5,000 as a gift that I don't have to pay back because I'm gonna need it in a letter. I'm gonna need it in a letter to give to my loan officer. Okay. Right. She said income tax time. So yep. Okay. And then the ongoing costs, the mortgage payment, the utilities. You like that square footage. You like to have all the family come over for the holidays and different things like that. But what are the utilities? You could always call the water department and ask them what the history is on that particular property. Your insurance agent, you can ask if there's been any claims. Claims follow the property, not the person. So if there was a fire, if there was somebody that ran into it, if the house was broken into, you're going to pay for that past owner's claims. Okay? Yes. Claims don't follow the people. They stay with the property. Yes, because the house is still in the same neighborhood. So the likelihood of whatever those tragedies.
They got farmers with somebody else. Wouldn't that?
Yeah,
But that can't.
Usually the claims for the property, they do follow, and they could follow the the house as well, but I know.
Oh yeah, well,
for the people.
yeah.
If you get a house claim,
Yeah.
go and try to eat their cost.
Right.
You file a claim.
Right. So I mean, you're a person too, but do know as you purchasing that property, that if there was existing claims on that property, even though they've been paid or whatever, your premium will be higher because they're going to base it. The property is still the same. You know, so if there was a fire and that there's still not a new fire department in that area, you're going to pay for the risk of that.
Really?
Yeah, you're still going to pay for it. So you can ask what the premium, if there are any past claims on this property. You can ask your insurance agent about that property and things like that. Because if not, that will be included in your analysis for your premium.
Lorenzo and I have a friend that lives down the street.
Mm-hmm.
And one day a guy ran into his house. I mean, actually
Right.
into his house.
Mm-hmm.
And they had to replace one whole wall of his house.
Is this
Part of
house on
his
the corner or something?
Uh-huh. And so that's a claim against that house.
That property, that house has not moved from the corner, right?
No, it's in a bad spot. But they had to.
It's in statistically, it's in an area where it can happen again. Statistically. Now, unless you can pick that now, if you're doing mobile home, that might be something different. But you can eat the cost of that insurance. So these are just some of the expenses that you can check on. You can call ComEd or whoever the electricity provider is. You can ask what the past bills were, things like that, so you can get an idea of what the utilities were for that existing property. Okay. And if it's new construction, you can ask what has it been like in that neighborhood? What do utilities tend to be like in that neighborhood? Things like that.
Okay.
Yeah. Yeah. And then maintenance and costs. Those are ongoing costs. So page 4. All right, we talked about this on Tuesday, that doggone spending plan.
Oh,
Yeah, so to come up with that that closing cost and down payment, and I always tell people, general rule of thumb, down payment, you want anywhere 5% of the purchase price and 6% for closing costs. So if the house is $100,000, a good cushion would be $5,000. I mean, now most people have anywhere from like $2,000 to what have you, but a really good strong figure would be $5,000. And then your closing costs, you want an additional $6,000. So for a $100,000 home, I would want to have at least about $11,000 or $12,000 in the bank. Okay, anything over that makes my picture even stronger. Okay, on the low end, maybe 6,000 or so or what have you. You know, you still can do it because there's some grants and things that we're going to talk about here too. But those are things to keep in mind. Okay, when you get ready to purchase, they're looking at anywhere from about, you know, a good 10% of the purchase price up front or to be in your savings. Season, that's what we call season, which means that when they ask for 3 months of bank statements, they can see that this savings account carried every 3 months. Now, if you provide 3 months of bank statements and then all of a sudden there's 10,000, they're going to ask, where did that 10,000 come from? Okay, because that could be, you know, your cousin Pablo. You know, he's in a certain type of business and he knew you're one of his favorite cousins. He thought he'd help you out. So he gave you 10,000. So no trace.
I noticed with us too, when we move money from one account to another,
they want to know.
They want to know
Yeah.
exactly why you moved.
Yeah.
And where it came from.
And this is,
You know, and I didn't know
yeah.
anything over $1,000.
Yes, or if you have deposits, if they constantly see deposits of 200 and 300, or what, they'll ask you, where does that come from? Things like that. So this is also part of the terrorist. Huh? There you go. Well, as long as if you can prove it and you can say where it's come from. Or even if I had that 10,000, I could say that it's a gift. They're going to want a letter from my family member. They're going to want pay stubs from that family member. They may want to see that family member's income taxes to see what their income has been. Because if you only make $2,000 a year, how did you give me $10,000 worth of savings? Or if you only work part-time, how did you give me $10,000 worth of savings? They need to trace that money.
Yeah, and even if you get your down payment from a family, like if I got from my son, they want notarized.
Yeah.
They gave it to you.
Yeah, absolutely. So they're gonna be all in your business. Okay. All right. That is not the views of Jaria Donaldson. That is the views of one of the attendees. Just want to put that out there. Okay, so that spending plan, real quick, that we talked about. So there's the 50-30-20 rule, and this is a way to help you come up with that down payment. So this is what percentage of income should go towards in your spending plan, the different categories that it should be part of. So 50% of your monthly net income should cover your needs. If your rent is being taken care of, your housing is being taken care of, all those things are being taken care of, you want that to be within that 50%, okay? 30% should be covering your wants. Now I'm gonna tell you, if you are doing 30% of your wants with your net, girl, you got your hair, your nails, them toes, you are doing it. You're going out to eat every Sunday. You're doing pretty good, okay? And then, right, driving the car that you want. And then 20% is going to your savings and debt. I always tell people, really kind of switch those numbers around. Maybe have 20 go to cover your wants. Remember, wants are not the needs. So these are little extra things. Or really change that 30% to your home. If we're talking about actually purchasing a home, 30% of your net income should be going into savings towards your homes. You can actually cross out wants and put home, okay? And then as we talked about yesterday, your debt that's allowed to you on each credit card should be under 25%. 25 to 30%, and then your overall debt should be under 43%. Okay. All right. So, and just when you're getting ready to create your spending plan, you want to be honest with yourself. You want to understand your habits and how you manage them, and then find ways in your spending plan to set reasonable goals for yourself. So, if I say I want to be a homeowner in the next year, I need to know what it's going to take to come up with what purchase price am I looking at? Do I think I want, $150 home or $1,000 home? What type of down payment am I looking for? Okay, because remember I said it's about 10% of the purchase price is what you kind of need to have in savings. Okay. And then understand spending plan is not permanent. It changes as you change. So if I'm doing 30% savings right now, I understand that this might not be my life savings habit, but that's what I need to do to get into the home. Okay. All right. Now, the 4 C's, this is what your lender is going to look at. Your lender or your mortgage banker. They're going to look at your capital. What do you have to bring to the table? They're going to look at your capacity. How much can you afford? They're going to look at your credit history, and they're going to look at collateral, your assets, your 401ks, your savings, different things like that. Cars, that are paid off, things like that. Those are all considered collateral. All right. And then these are tips for improving your credit score to purchase a home. So you definitely want to take a look at your credit. We talked about on Tuesday, everybody's entitled to a free credit report. You want to make sure that information on there is correct. I've had some home buyers, they've never owned properties before. They get a copy of their credit report just to make sure everything is okay. And they got a family member that has a mortgage in their name. Someone took their identity when they were younger. You're 24, but you've had a mortgage since 1950 something, or whatever, so how does that work? The birth date, you want to make sure that the birthday is correct. I know for me on my credit report and bills and things that come to my name, I always have to make sure that they take the Mr. off. They always have Mr. Jaria Donaldson, because Jaria can't be a female name. It has to be a male name, I guess. So I've seen Mr. Jaria Jeffrey Donaldson. So they combine me and my father together, Mr. Jaria Jeffrey. There you go. So, so that's the first step. You want to make sure that information is correct. Pay your bills on time. We talked about that too on Tuesday. Especially, yes.
When I tried, because they keep sending me things like in Jeffrey II.
Oh.
Jonathan II or Jeffrey Jr.
Mm-hmm.
And I've never applied for credit. And I asked them to take that off, and they said they can't because I've got mail and stuff in that name. And I said, you don't.
That's not true. Yeah, that's not true.
But yeah, I get letters, and sometimes I get Sandy's mail and stuff.
They
used to send stuff to my house. No, I wouldn't check it.
Yeah, and really, what Flo said, right? You know that. What Flo just said. Have you checked your credit report lately to see what addresses? Yeah. Or if they have, your nephew, they could be having him.
That's true. They get David, because David is not senior legally.
Mm.
So because there's a David Jr., he gets his stuff mixed up all the time. That's why we had to remind David, you need to start using
Mm-hmm.
Right.
Because even though their socials are nowhere near the same.
Doesn't matter. Same area.
Yeah. And they lived in the
Yeah.
same house.
Yeah.
It was stuff that would just come as David's fault. And then it really was for David Jr. So.
Especially with him being in the Army, you don't know what type. It could be the same, things listening. Yeah, same soliciting because he was a vet or he's a veteran. So,
Yeah, you got a lot of similarities. And you know what? They make mistakes.
Yeah.
The government and companies.
Stationed in the same place.
They will disregard a birthday in a minute.
Oh,
right?
absolutely.
So you really need to
Absolutely. And then a lot of times they can't read my handwriting. They don't care if they got that address. They'll send it'll be all kind of scribbled, W in my name. I guess that's what that looked like. Here's your mail, Mr. Wubbabum. There you go, Mr. Wubbabum. There you go.
A week ago, they was calling me for Renita. I don't know how they connected Renita.
Oh, see, so that does sound like a nephew. That sounds like they're connecting you to Jeff. That's why they're asking about Renita.
I tell them, yeah, that's why. They're
Yes.
connecting the brother.
They are gonna look for anything that is.
They're like, now why is this soldier lying? He lying. He belongs to the United States.
Okay, that's what's
Bless your heart. Yes. So that's why it's important to look at your credit report. Plus, parking tickets will be on there. Tolls will be on there. People can give your information for parking tickets. You can for
I had
loans.
this person put me down for a loan and never asked me.
Oh yeah.
You know when they put
Yeah, I
the
know
list
that.
in?
Yeah, yeah.
And then they calling me for their car note.
Yeah.
And I'm like, I never even knew they got a car. So, and they can do that legally because it used to be you had to ask the person.
Yeah.
But now people can just put you down as a reference.
Yep.
And
Absolutely.
then they call you.
They call you.
That's why it's important to look at your credit report. Okay. When you're looking for a home, you want to make sure that you only open accounts as needed. So after you sit down with your housing counselor or your loan officer, whichever you do first, and they advise you if there's a need to open up credit, if you have an established credit, that might be what needs to happen first. But you don't want to open or close credit when you're getting ready to apply for a loan until either that loan officer tells you to do so or your credit counselor. Now, if I go to Bank of America and I fill out a loan and Bank of America gives me this action plan, but then I hear about PNC and I take it to PNC, I can't take the action plan that Bank of America gave me to PNC, okay? Because PNC may say, no, you shouldn't have closed any of accounts. I wanted you to keep this account open. There's different underwriting and different things like that. So once you've really determined that this is the lender that I want to work with and this is what I want to go with, you want to follow the plan that they give you, okay? All right?
I know we were buying a house. We went in. I know they're very strict about moving money around.
Yes.
And make sure everything's in place. Whereas when I went to Farmer Fleet, and he wanted to, I'm not gonna buy nothing because I'm stressed out about
Right.
leaving the money right where it is.
Right.
And so we get there, and he said, "I'm just gonna look." And yes, so we went in there, and I went somewhere else. And I came back. He had 3 pairs of jeans in the buggy.
Right,
And I looked, I said, "What is that?"
right.
Jeans. I said, "I told you we gotta leave the money right where
Right.
it's at." I said,
Yeah.
"We can't move the money around."
Yes.
I said, "We can't buy a drink of water right now."
You know what? You are
And
absolutely
he
correct.
looked at me,
Yeah,
politely put it back.
yeah,
Put it back. I
Yeah.
said, "If this is between a house and a pair of jeans,
Yep.
but you got 20 pair of them already.
Yep.
We're gonna put these back."
Your financial picture needs to look exactly the same or better when you meet again, because they're going to pull your credit again at before the closing.
Right.
So
I was so stressed
you
out.
won't believe how many first-time home buyers, they go get the furnishing for the home, open up the credit,
Mhm.
go get the furnishing for the home, and now you've changed your debt to income ratio.
Yes.
So now this $200 home, you've opened up an account for $15,000 worth of furnishing. You got the old teak, the antique couch and all those things going on, the big screens, and now that needs to fit back in your 2-bedroom apartment because your financial picture cannot. I had a client that I'll never forget him. He bought an Escalade. His car, it was hanging on by a thread, but we were like, if you could just hold out just a few weeks, just hold out, and then you can go get a car and all these other things. And he bought an Escalade, and they ran his credit. You know, the Escalade was like what, 60,000.
Yeah.
They ran his credit. Oh no, he dropped. They were like, no, yeah, they denied his loan.
That
So
was the situation with my father. So he and my, David's stepsister, stepbrother, they were supposed to get a house last year, and she went out and she bought a 2018, got everything
loaded.
Buick
Yeah.
something, and now they sharing like a 2-bedroom apartment
Oh, wow.
because and it's not
Because she
gonna
riding
be a
around in
while.
their house.
It's not like this
Yeah.
year is gonna change. It's
Yeah.
gonna be a while until she gets rid of some of that.
Yeah, because now you got to get that debt down. Yeah, it's serious.
When we lived, when Chad and I were married, we
Mhm.
were going to refinance our house, and they wouldn't refinance it for $25.
Really?
Yeah, and we
Right.
already owned a home,
Right.
but just trying to refinance
Right.
there was a $25 debt that we didn't even know anything about
Right.
some candy or something.
Right.
We had to have a letter and pay
Right.
that $25
Yeah.
before they would even refinance.
Yes,
us.
yes.
$25. And that's whenever he was saying Lorenzo wanted the jeans.
No, I already been down that road. Yeah, yeah. So that's why, you know, when we're talking about spending plan and credit and all that stuff. Remember, this is going towards purchasing a home. The one we talked about on Tuesday was just in general, overall, improving your life or what have you. But when you are thinking of purchasing a home, that's what we say. It's in game mode. You know, you gotta keep your mind focused. Okay. And then so we have on page 5 how you can order your consumer report. You can go to each one of the actual credit bureaus that are listed here. You can call them as well too. You can dispute things right online. It's free to do so, or you can send a letter for some of us who still likes letters. Stop. Or you can go to annual credit report. Now the annual credit report, that will have all 3 of your credit reports pulled together, and it'll give you an average of your credit score. Okay, all of these are soft pulls. They won't affect your credit if you go to those. Okay, and then lastly, we're going to kind of talk about some terms that your lender will go over you. One is called how much can you afford. So we're talking about purchasing ratios. So anybody ever heard of the front end, back end on the ratios when you're purchasing a home? Okay. So on the front end, that means how much house payment you can afford. So that's the principal, interest, taxes and insurance, and homeowners association. So on here, we have different type of ratios. So the first one says conventional is 28. So that means 28% of your gross monthly income should just be dedicated to your house payment with the conventional loan. Conventional loan means it doesn't have PMI or mortgage insurance. So it's not an FHA, a Fannie Mae, Freddie Mac, any of those other private mortgage insurance. VA, it's not a VA loan, okay? On the back end, where it says conventional, it says 36. That is your house payment plus all other debt. Definition of debt is anything that's on the credit report, okay? So student loans, credit cards, installments, all those things, that should not be more than 36% of your gross monthly income, okay? So conventional is a little tighter because generally conventional means that somebody's putting anywhere from 10 to 20% down, okay? So that's why those are so tight. The next one is called community lending products. So for instance, Bank ABC might have gotten in trouble. And so now they're advertising, we have this new product that's out. You know, we really want to help the community. So now it'll have a little more lax. You see on the front end, they have 33% of the house payment, but then on the back end is 38. So they're allowing a little bit more debt, okay? And then there's FHA. We're all familiar with FHA, Federal Housing Administration, all right? That's PMI, private mortgage insurance, which means if I default on my mortgage, HUD is going to pay the insurance, or FHA is going to pay the insurance, okay? That, I believe private mortgage insurance right now is anywhere from about $80 to $100. So back in the day before all the foreclosure and everything, it maybe would be like 20 to maximum 40, but because of all the foreclosures and the likelihood of people to default, I guess.
So HUD forecloses,
Mhm.
do they pay the house off and it just goes on your credit, or how's that work?
They pay a portion of it off.
Okay.
So, and then it's up to them if they want to come after you for that deficiency judgment. So, because our state has a
Can you file
deficiency judgment.
bankruptcy on that?
You can file bankruptcy on anybody.
Well, I know there's some government stuff you can't.
Before it gets to that point, though,
Yeah.
can probably try like a short sale, work it out with your bank.
Loan modification. Yeah. So with that insurance claim, like what she said, before you get to that point, the purpose of that private mortgage insurance, they don't want to pay that insurance claim. So they're going to ask ABC Bank, did you do these 12 steps to try to help this homeowner avoid this? And then if the homeowner just couldn't avoid it, then that's when you pull out, king card.
Let me ask you, with the PMI, how many, do you know what the percentages of that loan has to be paid down before that comes off?
80% you can ask, 78% they must take it off.
They take off 70%?
No. So once you hit 80% of the value of the loan, you can ask for it to be removed. They have the right to approve it or decline it. And then once you hit 78%, they must remove it automatically. Okay. All right. Now with FHA and VA, PMI right now is for the life of the loan until you reach that point. There was a couple of other clauses that were in place, but since 2012, I think they implemented that it's permanent unless it hits one of those tiers.
Blocks and blocks of short sales.
Yeah. Yeah. Okay. So VA only has the one ratio. So if you're a veteran, there's only the one ratio, 41% of your overall debt by your gross. USDA are rural. Yes, USDA makes loans. Our agriculture, the meat people, they make loans.
While we were in DC, they had that whole, remember they had that entire like
Yeah,
8 blocks or something.
because they're doing homes and cattle. Yeah. So these type of loans will really work in Sugar Grove, Plainfield, Yorkville, rural areas, low population. Yeah. No, but there it goes by the density and however many square footage or what have you. Then you might be able to qualify for some of these loans. Now see how it says there's 29% of the house payment, but then it's 41% of the gross monthly income. So a lot of times these type of clients, realistically, and Oswego and those different areas like that, a lot of times I see homeowners that have payments that are about 500 is the most on that, and that includes their taxes, insurance, and everything.
So
That's
remember,
people
I don't
with
know.
farms.
Yeah.
No, they're not buying firms. They're buying single family homes. Yeah.
It could be a lot of land.
Yeah.
Right.
Like when I was telling you guys about how Kendall County they
Mm-hmm.
increased taxes, and the people came out and they was tripping
Mhm.
because their taxes was literally more than what their mortgage payment
Right,
was.
right, and that could be very much be the case today in today's world, well, a lot of places. Okay, so yeah, was it Minoka and all those areas like that? You can use these type of you can get this type of lending.
Because I know it's Sugar Grove first blew up. All the people were complaining out there
Mm-hmm.
because they were retired like in the 70s, and then all of a sudden their taxes, they had to go to Walmart and get a job
Yeah,
just to pay the taxes.
to pay the
And they had
taxes.
retired
Yep.
from cat.
Right,
You know?
right. There's still little pockets where you can get this type of lending that's there. Okay, and then the last ratio we have here, if you're still renting, some things to consider is that your rent should not be more than 30% of your gross monthly income. Now I keep saying gross, but I tell my clients net. Apply this to your net. Net is what we live off of, but just know that your banks are going off of the gross. So really, for if you're a renter, your rent should not be 30% of your net income, nor 36% of your rent plus your debt is what that back end means. Okay. So those are nice ratios to know when you're going into the bank, because this is what your loan officer is going to talk to you about. Okay, so what I want to jump down to, we were talking about, coming up with down payment and things like that. So on page 6, the second slide talks about down payment assistance. I always explain down payment assistance is the satellite radio. So you buy a car and then you add satellite radio. You don't buy satellite radio and then add a car. Okay, so it can enhance the car. Okay, so down payment is to enhance your loan. It will either help you buy more loan or it will help lower your costs. Okay, but a lot of times I think the general public thinks down payment will help me get the loan, and it doesn't help you get the loan. You have to get the loan first and then you'll get access to the down payment. Okay, so some that are here, even though that writing is pretty small. So one is IDA, which is Illinois Housing Development Authority. They have a grant that's up to $75,000. There's also a link here that you can go to. They actually have 4 different grants. So $7,500, and you don't have to pay back. Okay, it's forgivable after 5 years. Okay, and it's anywhere in the state of Illinois. And then, yeah, anywhere in the state, and it's based off of income. So IDA's income, I think for a house of 1 is anyone who makes less than 70,000, and if you make over 70,000, you can still get up to 3% of this 7,500. And then for a household of 2 or more, I want to say it's like 106. If the household definition of household is everybody who lives in there. So Jocelyn and I'm the only one that has a job. We would qualify for that. So okay, or if Jocelyn was 18 and she was making 20 a year, we still would qualify for that. So okay, all right. That IDA is going to be based off of your credit score. Some of the down payment is based on your credit score. Some of them are not. But IDA, I think the minimum credit score is 620. Okay. So they have that one. Then they have the one that is up to 6,000. I think that one you do have to pay back. And then the one that's 10,000, you do have to pay back, but you don't have to pay back till after a year. And I want to say the payment is like $60 or something like that for 5 years. So it's interest free, I believe.
Which one?
For the 4% of the purchase price at 6,000, and then the 10% one, which is up to 10,000. Okay. So if I qualified for 110,000, these grants can either boost up my purchasing power. Now I can qualify for 120, or I could lower that payment under the 110. I can make it lower. That's how that helps. Because remember, I said you need about 12,000. You know, for a $100,000 home, you need about 12,000 out of pocket. Most of these grants only require $1,000 out of pocket. The $1,000 can also be the earnest money. So it's not like I have to do earnest money and then another $1,000. They will accept the earnest money as that $1,000. Okay.
You see in a household, so like if a parent and a kid, an adult kid want to go in together and get a house.
No, they're not. They don't have to be on the loan, but their income has to be included.
But they can include that.
Yeah. So yeah, because they're So that's a very good. So definition of household is everybody in your household. They're going to look at your income taxes. So if you're not claiming an adult who's living there, then you're not doing the honor system. but in theory, they only need to claim what's on your income taxes, because those are where you list your dependents.
So saying that you want to buy a house and you're with your dad and your mom and everything. So if you're working and he's working, so they look at both the income taxes?
No, unless we're on each other's income taxes, I mean, they really can't say anything. But us being the truthful people that we are, right, they would look at my income and his income.
See where you fall in that.
Yeah.
Because you're grown.
Right. But I claim that as my household.
Right.
Yeah. Okay.
Yeah. But so, like if Jameer and Jenny were to get a house, there's only one check there.
Yeah. Yeah. And it would just be based off of their information. Yeah. Yeah. Because neither one of them claim their parents as dependents.
Oh, he was working out.
Yeah, he was. Yeah, he was. He was working that out. Right. But listen, I mean, so if you're a grandparent and you're taking care of grandkids, those are dependents. If they're listed on your income tax. If you're taking care of adult, yeah, it is. Yep. Now this year they've made some changes to their down payment. A lot of times it's forgivable. Over the last 5 years, I think they've made some changes. So this up to 10,000 is a new one. People still don't really like that you have to pay it back.
Well, you know, the only reason why I asked is because I've never known anyone to use either for earnest.
Yeah. For just that, they just take that $1,000 and that you don't have to come up with another $1,000. Yeah.
They still had a first-time home buyer thing.
So that's a very good question. So first-time home buyer, some grants have eliminated that. I believe Ida has. You don't have to be a first-time home buyer. So I sold my property. Definition of a first-time home buyer is anybody who's not owned real estate in the last 3 years. Residential real estate, I should say. But let's say I sold my house 2 years ago and I'm looking to purchase in a HUD census tract. I will be considered a first-time home buyer, or they got rid of that first-time home buyer requirement. I can purchase this home and use these grants even though I was a homeowner last year.
Wow.
Okay. Definition
like
of
$8,000, right?
huh?
That's like $8,000 for the first-time buyer.
7,500. Yeah.
Yeah.
Mm-hmm.
Okay.
Now, definite, and then if you're a veteran, you don't have to. You're automatically, you can purchase again.
Would that be the same with the condo?
Yeah. Yes. Yep.
But I sold that house like 7.
So on
More than that, way more.
by real estate definition, you're a first-time home buyer anyway. Yeah.
Yeah.
Yeah. As long as if your name is not attached to real estate in the last 3 years, you're a first-time home buyer.
Yeah.
And so definition of HUD census, because everybody thinks that's the hood. There's there's parts of Naperville, there's parts of Stonebridge is in the HUD census tract. It just means where they're trying to redevelop the area. There's HUD houses in Hawaii that are like $2 million. Remember, the HUD census tract is different for each area.
Yeah, what the normal is for that area.
So for us, down towards Orchard, where Home Depot is, that's a HUD census tract. That's a nice area, that's a HUD census tract. So just things to keep in mind. So also on this small print, we have Illinois Assist, which is 5% of the purchase price, or 4% if you're using FHA. This one does not have a credit score, and it can be layered. So I can participate in the 7,500 and I can participate in the 5%. The thing is finding a lender. You have to find a bank that participates in all of these programs. Okay.
Do they have a list?
Yeah, when you go to their that's why I included the websites on there. When you go to the websites, it will tell you who the participating lenders are. Or if you're looking for, or if you're looking for a loan, you can take this to your loan officer and say, which of these do you participate, or all of them? Okay. So, and then get their magnifying glass out and look and see. Okay. Then there's the Federal Home Loan Bank that has the Down Payment Plus, or the Affordable Home Program. That's another $5,000 that can be added with these. So literally, when we say that someone got like $20,000 or $25,000 towards a down payment and they didn't have to pay it back, that can happen. And for those of you who have the email, I will make that bigger and send that to you. Okay. Well, it's a PDF. So
Now, let me ask you something. With a lot of these programs, are they typically coupled with conventional loans?
Mm-hmm. Yeah, but FHA generally does allow it as well too. As long as because these grants aren't from the same pot of money, so that's why you're able to layer them. If they were from the same pot of money, that we would have that problem. Yeah, I think there's somebody coming to the front door.
Now, each one of these loans have their own stipulations.
Down payment.
Or whatever.
Yeah.
They if you layer it, then this one might say this, and you got this, and this one says this, and you have to do that.
Right.
So it doesn't come on one big pot, and you just do.
Right. So like the IDA, that has a credit score requirement, which is 620.
Right.
The Federal Home Loan Bank has a credit score of 640. And then the King County Down Payment Assistance Program, there is no credit score requirement. Hi. There is no credit score for the Kane County. Definition of Kane County, you know, if you live in Aurora, there's pockets of Aurora that are unincorporated and there's township. So Aurora has its own separate money that the Kane County can't be used with, but then there's other pockets of Aurora where the Kane County money can be used at, okay? So like, was it Maryville? Yeah, that area right there, that's unincorporated. So our township, you can use, so you can use the NSP, and the NSP is up to $10,000. So that is forgivable. You don't have to pay that back. And that's based on income guidelines, which their income guidelines are pretty similar to IDA's. Okay. And then we also have actual lender down payment assistance. So for instance, not to highlight one company, but ABC Bank, yes, ABC Bank that has a blue logo, and they're kind of everywhere. So
with a white circle.
With a white circle, it's got the blue circle. Mm-hmm. Yep. And they don't really participate in any of these down payment programs, but they may have programs themselves. Oftentimes, I found if you have a loan officer who's knowledgeable in the industry, they may be able to work something that mimics these down payment programs. So, you know, just because your corporate bank may not necessarily participate in down payment assistance type programs doesn't mean that you don't have to use them. You just need to work with a loan officer that's savvy enough. And I always tell people, a good loan officer, if you ask them about one of these programs, they'll say, I don't know, let me get back to it. If your loan officer or your realtor, because we got some realtors that are bogus too, if your loan officer or your realtor says, oh, don't worry about those down payment assistance, you got enough money saved, just go ahead and get the loan. Right. This is money that is available. It's free money. Illinois has one of the higher homeownership rates in the country. I think across the country it's about I want to say it's about 12% is the homeownership rate or what have you for states. And I want to say I think we were like 9% or so. So we're pretty aggressive about homeownership. And then the city of Aurora, I think their homeownership rate, I thought their homeownership rate was like 68%. So Aurora is pretty aggressive about home ownership. So, you know, it's money that's here to keep you here.
So generally when you have home ownership, you have, you know, less crime,
Yeah.
you have stability, that pay more attention to their property.
Right.
So it's just benefits all the way around.
Mm-hmm.
And like when Aurora took all them old houses that they made into multiple apartments,
Mm-hmm.
they gave people money to make them back to single dwelling.
Yeah, that was under the NSP program. Yeah, mm-hmm. Absolutely. Yep. Okay. And then the other thing, speaking of our great city of Aurora, Aurora has Choose Aurora. It's out of money right now, but it will be refunded probably in July, I think. And they have where you can get 5,000 or 3,000, depending on where you purchase. And I believe the 3,000 is more in the 60506 zip code, and the 5,000 is in the, the east side.
But it's definitely on both sides.
Yeah, it's definitely on both sides. Yep. And true definition of city of Aurora. So if I'm in the township, I can't use the choose Aurora. True definition of city of Aurora. Okay.
So it doesn't matter the county as long as it's in Aurora. 'Cause I
City
know
of Aurora.
has like 4 or 5 different
So
counties.
true definition, city of Aurora, not Aurora DuPage, Aurora,
Also, it has to be Kane.
Yeah, I'm sorry, you just said it. Yeah, it has to be Kane Aurora. Yep. Okay. But these are all programs that can be layered. And for instance, like the city of Aurora, they will go in 5th place. They don't care. They just want you to take this money. Okay. So if I'm using IDA and I'm using Federal Home Loan Bank, and then I'm able to use choose Aurora. Aurora is like whatever position we got to be. We don't care. Okay. All right. And it's forgivable after 3 years. Okay. All right. The next slide here that says the opt out. This is the number for the opt out. So if you don't want to get those type of mails and things like that, you want your name to be taken off the list, you can call this number. Now this one is for the mailing. There's another one that's for your cell phone. And I think the cell phone, I think you have to do that one every year. The mailing is every 5 years. Okay. Free to do so. And then, so basically in summary, we talked about the pros and cons of home ownership, the steps to purchasing, mortgage payments and other costs that went into home ownership. And then we also talked about, the ratios and different things. Those are what are going to be used to determine how much house you can afford, how much money you need to put down, things like that. So if you're interested and you think you want to move forward, the next thing would be to have a session with one of our housing counselors. And you can set up an appointment either by giving us a call or by email or talking to me later on this evening. So, all right. Any questions? I know that's a lot of information. But any questions over those down payments or anything? We're good on those. Remember, you can combine them. It's just a matter of finding the bank. And so that's one of the things that EWC Home Center will do. We'll help you find the banks that participate in those programs, so that way you can get the best deal for yourself. Okay. All right. All right, you guys. Well, thank you. Yeah.